Intro. Welcome to Tesla Stock Daily Drive, where we navigate the fast lane of Tesla's market journey. I'm your host, Dusty, here to cruise through the latest numbers and narratives guiding Tesla's path. So buckle up and join me as we dive into today's market insights. Market overview. Let's kick things off with a peek at Tesla's performance this past Friday, June 27, 2025. The stock opened at $324.51, climbed to a high of $329.34, and dipped as low as $317.50 before closing at $323.63. This marked a slight 0.66% dip from Wednesday, reflecting a bit of a cooldown as we headed into the holiday weekend. Trading volume hit around 89 million, slightly below the usual, which hints at some cautious investors holding back. Key financial stories. Now, on to the driving forces behind Friday's movements. Reports emerged from Western Europe about Tesla's sales facing some headwinds, marking a fifth straight month of declines, particularly in Britain, Germany, and Italy. The rise of more affordable Chinese EV competitors is putting some pressure on Tesla in these markets. This has investors on edge, as they eagerly await the Q2 delivery figures, expected next week, to see if Tesla can beat last year's record of 444,000 vehicles. On a brighter note, Tesla's robotaxi initiative in Austin is sparking optimism. The controlled rollout garnered praise, prompting Benchmark Capital to reiterate its buy rating, even bumping up the price target to $475. Although some near-term challenges remain, the long-term outlook seems promising with these autonomous moves. Fundamental context. It hasn't all been smooth sailing for Tesla this year. Since late February, the stock has faced pressure from a less-than-expected performance of its automated feature in China, causing a temporary dip in market cap. First-quarter earnings also fell short of expectations, with revenue just shy of $19.34 billion, compared to a hoped-for $21.11 billion. That dip was mainly due to a 20% drop in automotive revenue, leaving investors a bit wary. Investment tips. From a technical standpoint, Tesla's stock appears to be navigating choppy waters. It's sitting below key long-term moving averages, but there's a sign of stabilization in the short term. The relative strength index is creeping toward oversold territory, while the MACD still points to downward momentum. If Tesla manages to push past the 5-day moving average with some energy, we might see a short-term rebound. However, breaking through the 50-day resistance would require more robust positive news. Looking ahead, keep an eye on Tesla's Q2 delivery report next week. Projections are floating between 370,000 to 390,000 deliveries, below last year's highs. The Federal Reserve's upcoming meeting also adds a layer of intrigue, as shifts in interest rates could have broader market impacts. Plus, any updates on the Austin robotaxi pilot's progress could sway sentiment on Tesla's future in autonomy. Ending. As we wrap up today's drive through Tesla's stock landscape, remember that the road ahead is filled with opportunities and challenges. Keep your focus sharp and eyes on the horizon. Thanks for tuning in to Tesla Stock Daily Drive. I'm Dusty, reminding you, when the dust settles, only the truth remains. Safe travels, and we'll catch you in the next episode.